All right, good afternoon folks. My name is Scott Andrews and welcome to today's webinar. We will be highlighting the Discover platform while also trying to educate you a little bit about how we and our clients trade with statistical edges. So it's going to be part educational and part of a demonstration, if you will, of our platform. Matt and I will be going back and forth. Matt's our lead trainer, lead operations guy, lead support person, does a whole lot for us, does a lot of research for us as well. So delighted to have Matt as always join me. And I'm Scott Andrews. I'm one of the co-founders of the company, if you're not familiar, and we're delighted to have you. So with that, let me cover the required disclaimer. We will be showing some various research as we go through and give you examples how to use the platform and how our clients use the backtesting tool and platform that we have. Do use this information at your own risk. That said, backtesting is imperfect science. Past performance is not necessarily indicative of future results, and you can lose money trading if you're new to trading by chance. I thought it'd be interesting maybe to shake it up a little bit and share a snippet from one of our, I guess you could call him a fan. We're certainly a fan of his, Brett Steenbarger. He's a friend for sure. He's been a bit of a mentor to me and us here. He's also helped our clients. He's been a speaker to various events. He's also been Paul Tudor Jones, world famous hedge fund manager, his fund's performance coach for a long time. I don't think he does it anymore, but he did it for a number of years. And he's just a tremendous resource. If you're not following him and his blog at Trader Feed, definitely check it out. But he sort of coined this term, and I've heard others use it as well, which describes this concept of hybrid trading, which is how I got started. I certainly didn't think of it that way, but it's this notion of using statistical information that had been well vetted out and researched as the signal, if you will, but manually executing them. So using a bit of a quantitative approach, but manually executing the trades as opposed to systematically trading, which is what a lot of people think of when you think of algorithmic or systematic trading, right? You find edges and strategies, you code them and execute them in a systematic fashion. And it sounds like nirvana, and is to many people. In fact, I'm just curious, any systematic traders in here, people that consider themselves primarily systematic traders by chance? Or discretionary traders? Okay, there's one or two coming in. I would have guessed this is mostly discretionary traders, but you can use our information and statistical edges both ways. And what I'm suggesting here with Brett's help is that there's actually a third way, which is you can find edges that are so robust you can actually code them and execute them manually. And that's how I got started when I came out of the corporate world 15 years ago. I realized I didn't have the time to learn how the art, nor quite frankly the art and interest to learn the art of chart-based trading, and instead created lots of research, identified some unique patterns, but I manually executed them. And in my mind, it gives the best of both worlds. So yeah, Larry's doing a bit of hybrid trading as well. I think it's the way to go. That's the way I'd probably say most of our clients, I don't know that for a fact, use our information as well, a little bit as well, but you can do it either way. You can augment your discretionary trading. You can use this to find tremendous edges that you can code and trade algorithmically if you want, or you can do the part in the middle that I just described and known as hybrid trading. So today I'm going to show you how you can find statistical edges with or without our platform as well. We think our platform does a tremendous job and makes it easier than perhaps any other solution out there to find edges to trade intraday. And then we'll show you how you can use this information and find your own and test your own ideas, better understand markets, prep for your trading day, refine strategies with better stops and targets perhaps, and even how to manage all your research and edges and even be alerted and know when to trade. And Matt will be doing a lot of the demonstration. I'll be adding the color commentary, and we'll cover pricing at the end and answer any and all of your questions. So if you've never thought of it, and I know a lot of discretionary traders are just used to looking at the charts and reacting to the patterns and the price action that's happening right then, And certainly we're all aware that news can be a catalyst, but there are many, many other catalysts well beyond just news, right? These economic reports, which I guess you could argue is a form of news, crude inventory report, non-farm payrolls, consumer reports, CPI, they go on and on and on. There's also calendar considerations, first trading day of the month or last trading day of the month, like we just finished last month, often have existing biases that can be identified and traded consistently, either as part of or as perhaps even your primary edge, if you will. And then certainly the market events like options expiration. In fact, we've got an example of that, Fed Day and so on. Those are what we call non-technical events. They're technical events as well. They can be price-based. Like yesterday we closed at what, a new 10, 20, 50-day, maybe a 100-day high. I'm not sure, but I know it was a 50-day high close. And that in itself can be a catalyst for price movement the subsequent day. It doesn't have to be, but it can be. Dramatic changes in volatility can also, in their own right, be technical causes for price action movement. So we broadly describe and we'll be discussing these types of ideas with our platform today as events. And again, they can be a catalyst or a trigger for price movement, and that can set up a tradable opportunity intraday. We're tracking over 500 of these right now. But where it gets really exciting is when you combine a catalyst, whether it be pre-open or post-open, a news report after the event, with unique price action, specifically as it relates to where a market might be opening. So just for a very simple example, everyone's familiar, I'm sure, with candlesticks, and you can open above the range, in range, or below the range. Those are just three simple opening price areas. You can also define opening areas by their size, by large gaps, small gaps. We do a lot of that, up and down gaps, pivot levels, support and resistance levels, Fibonacci's. It goes on and on and on. We track about 50 of those different opening areas in our platform. And when you combine those concepts with unique market events as I just described, it can create some very tradable opportunities in their own right. They can provide a catalyst, a reason for the market to move in a given direction. And a lot of people think these scenarios couldn't possibly work anymore, right? Because it's such a simple concept and you've got big money and all the hedge funds and so on. But my personal view, and I think many share this as well, is the reality of it is intraday trading has a limited absolute capacity in terms of its total trading volume. So that by its definition eliminates the vast majority of hedge funds and larger traders out there that can't accomplish what they want to get done quickly. It may take all day or multiple days just to establish a position, and then the same to get out of a position. So I thought it'd be interesting to maybe pose a question back to you. Now, some of you, I see a couple of familiar names in here, probably know this answer, so please don't speak up. But I am curious what people think the reality of it is in terms of trading 20-day high closes. So a unique event like a 20-day high close, meaning yesterday, like we had, literally yesterday was a 20-day high close. And many people would think there's no edge there, long or short, and they'd basically be right. In fact, you can see I've circled here a 52% win rate and a profit factor of just over 1. If you're not familiar with the term profit factor, it means the ratio of historical gross profits from the winners divided by the gross losses of the losers. And anything greater than 1 is made money, anything less than 1 is lost money. Anything around 1 has been sort of break even or a money loser by the time you account for commissions and slippage and so on. So a lot of people think there's no edge, and in this slide here, which is a screenshot from Discover, suggests indeed there is no edge. But let me ask you, that's not correct. What do you think the edge is? Is there a long bias after this pattern to the markets or a short bias? So just get a little bit of engagement. Go ahead and speak up if you know the answer because you've done this research. Don't cheat. Now this is for the, this pattern specifically, MG, is following a 20-day high close. So just like yesterday was a 20-day high close, what do you think the historical bias was coming into today's market? Long or short off the open? See some folks speaking up long. We did finish higher today, so maybe you're biased by recency. That's called recency bias. Oh, a lot of longs. One short. Well, actually, you're both sort of right and both sort of wrong. It depends. It all depends on the opening direction. So the slide that I just showed you, and I know it was probably a little bit confusing. As I've gotten older, I get up earlier now, so now I've been up for I've been working for about 12 hours, and I realize I'm a little weary. But the slide here actually shows you there is no edge. There is no bias for going long or short on the day following a 20-day high close. So, and I'm sure some of you maybe were assuming that I meant the direction of the gap, but that's exactly what I meant. If opening up after a 20-day high close, just like we had today, you all would have been wrong, well, the majority of you. The bias is actually to the downside. So this left pattern shows you that there's only a 46% probability of closing above the open when opening higher. So I'm using the regular trading hours, the 9:30 New York Stock Exchange hours, for going long on an up gap after a 20-day high close. And it's been particularly bad if you look here lately for the past year or so. It's just been abysmal. That's on 419 trades going back 15 years. And that doesn't include commissions and slippage, would have made it even worse. This is a terrible strategy. The average loser is much bigger to the downside. I don't know if you can read that on the chart or not, but the average loss is bigger than the average winner going long. And again, less than 50% probability of finishing higher. Bit of a head scratcher, isn't it? It catches, you wouldn't believe how many really, really world-class professional traders I'd love to ask this question of, and I'd say 3/4 of them get it wrong. Now what's really interesting is had we gapped down today, the bias was to the long side. Strongly so, almost a 60% historical win rate, just going long at the open and holding till the end of the day, and that's on 483 trades. So it totally depends on whether the gap is up or down, and that's the point. When you combine a unique market event, so yesterday was a technical event, a 50-day high close, a 20-day high close, and so on, with an opening direction, even as simple as simply the direction, not much less the size of the gap and the opening area, which, as I mentioned, can be defined many different ways. You can identify some tremendous edges right underneath your nose that many people don't realize. In fact, we were curious. We've traded many different events like this over the years, and with our own platform, we can finally now mine our data and identify just how many what we would call statistically significant edges or directional biases actually exist in the database. So we went looking for mining the data. We did it by different categories. We defined these events, which you'll see in the platform, as price events or calendar event, economic events, and so on. And we went looking for events based on unique opening areas, and even all opening areas, I should say, just long or short off the open as well. We looked at everything and found hundreds of combinations of opening areas with price events that had T-scores or T-tests. For any of you familiar with statistics, it's just a very simple, rudimentary, but highly effective way to identify if something has a statistical edge or not, and found hundreds with T-scores greater than 2, meaning more with 95% confidence in the data. Now that doesn't mean it's necessarily a causative linkage, and it could, in some cases, it's even noise, right? You test enough things, you'll find noise when doing this. But I think the broad scale here shows and makes our point that there are so many edges that you just wouldn't think of if you just, as I like to say, peeled back the onion just a little bit. Interestingly, and I don't trade crude oil, but if anyone does, crude oil has by far the most statistical edges in our database going back over the past 15 years. So you can use this information. That's what we're going to get into now. Many different ways to improve existing strategies, right? Make sure you don't trade against a known historical bias. That can improve your win rate, to improve your trade selection specifically, improve your market timing. We'll show you an example a little bit of how if you wanted to enter gold because you were fundamentally trying to get positioned to the long side, today could have, or the example we'll show you, could save you and help improve your market timing. You can trade weekly options. You don't just have to trade futures or micros, which are tremendous instruments. You can actually trade weekly options when you have a strong directional bias, right? I've started doing that of late with our friends over at SMB. If anyone knows SMB Capital, tremendous firm. You can create new strategies completely based upon these edges and become a hybrid trader like many of us are. So thought that would be interesting for you. In fact, taking it a step further, I started out as trading in a hybrid manner, manually executing these quantified edges, and I only had a handful of them when I started out more than a decade ago. I've built a portfolio, I should say loosely, we've built a portfolio because I have a lot of help that's now fully systematic. You see 69 strategies listed here, and I know it's probably too small to see, but I just wanted to make the point that there is way more opportunities to trade than we're even able to code. We've coded 69 fully systematic edges. Now they tend to be combinations of more than just one factor. So you might have a couple of events in an opening factor, or a couple elements of the opening that are unique to an event factor, or some market condition factor, and so on. But these are fully systematic, and these are if you look close, and you're welcome to blow up the screen, we'll send you the slides after the fact. You'll see the majority of these edges have been profitable since 2018 in live trading, not only our own accounts, but we have managed capital and run automated programs on behalf of clients as well. If you're interested in that, let us know. That's a whole different webinar we'll do one day. But you'll see the majority of these have been profitable, many of them nicely so. If you look really, really close in the middle, you'll see this one strategy, and I'm just teasing you here, I recognize that, called the Bugle strategy. Nasdaq, it's our #1 money maker for the past almost 3 years. It also works on other markets as well, and it was found in this platform about 3.5 years ago. So we were not aware of this particular setup, and it wasn't all that hard to find. So with that, let me get to the good stuff in terms of some demonstrations of this, but I did want to get you thinking. And by the way, the other point of this slide is you can create, you don't have to be fully systematic. What most of our clients do, they create their own portfolios of these different edges and rules-based strategies, and then they trade them manually. And many of the strategies we trade may only happen, at least I'm speaking on my own, and you can see some of these strategies in front of you, they may only happen once a month, 6 times a year even. But they've happened enough historically, and they're based upon edges that, or concepts, factors that I believe are sort of causative. There's some linkage between why the market may move in that given direction, that I'm confident trading them. And with a broad portfolio around different events, different opening areas, you can get a very diversified intraday portfolio. And that's what our clients do. Average client has over 40 of these such strategies or edges saved in the platform, and Matt will show you how to do that in a moment. Some have a couple hundred saved. There's really no limit. So with that, I guess let me just pause real quick. I'm going to take a sip of water. Any questions so far before we get into the demonstration of some use cases, some very specific ones that will get you thinking about ways that this might be able to help your own trading? I should have addressed that. Questions are welcome. We do have a lot of information to cover. This will be a very rich presentation in that regard, but anything I've said that's confusing or and I see a comment from Marcus about interested in managed accounts or automated strategies. Marcus, we'll make a note of that and follow up with you. If not, you can email me, scott@investorquant.com, or matt@investorquant.com as well. Okay, I see a couple people typing here. Oh, thanks, Matt. Okay, I'll keep going, and we'll come to your questions as we get to them. So what we're going to do now is we're going to do a little bit of, we've never really tried this. We typically try to just pass the mic to one person and let that person talk for a while, but we're going to try something a little different that we've never tried before, so bear with us. I will explain the use case briefly, And then Matt's going to show you how to do it inside the platform. I'm assuming many of you already subscribe to the Daily IQ, and you're used to seeing Matt demonstrate the platform and many examples there. But we're going to sort of do a sort of a speed process where we're going to go through maybe 8 or 10 different examples of how to use the platform to get value to hopefully improve your trading. And they're going to be around these different concepts. So if you look at the top, they'll say use case market knowledge, or use case daily prep, use case edge discovery, use case execution or trade management. And individually, you know, the difference may be small, but collectively, when you start finding new edges and improving your market knowledge, becoming a smarter trader, and improving your daily preparation process, improving your execution, improving your trade management decisions, it can make a tremendous impact on your trading. Not only can it does for many of our clients, and that's why most of our clients have been with us for many years. All right, so the first use case is better understand market behavior. I'm a huge believer in that the smarter you are, and not smarter in terms of intelligence, but the more knowledgeable you are. In fact, in my opinion, knowledge trumps experience when it comes to trading. A lot of people don't believe that, but I know too many very experienced traders that have not survived over time because their strategies and their beliefs were rooted in market structure and price action that stopped working. I used to be primarily a gap fader. I faded the opening gap. I was a mean reversion trader for years with great success, as some, see a couple of familiar names here know, that made a lot of money with me fading the opening gap. I wrote an entire book on it primarily. I still do a lot of it, but I'm way more balanced. It's about 50-50, I'd say, following the gap now versus fading the gap. And that's because I have a ton of knowledge from tools like Discover Platform. And that is more important, in my opinion, than my experience, because you can get too anchored to one's beliefs on what's worked in the past. So Matt, you want to show a quick example here of how to better understand market behavior? I think the example
Sure.
we're going to show is based upon a low breakout.
Yeah, so this example, we're just going to show how you can quickly find out how your setups work in different regimes. So as you can see the call out box up here in the top right, what is the probability that my low breakout strategy will work in a low volatility environment? Any guesses? Type in your guesses. Is low vol good or bad for a low breakout strategy? Type those in here and I will switch my screen over and we will build this out. I'll show you how I can build it out pretty quickly. So all I've got to do here in Discover, this is the platform where everything happens. So all I've got to do is select, my instrument. I'm going to use a couple different instruments, but for this example, I'm going to use the ES S&P 500 futures contract, and we'll look at this 60 minute low breakout. So all I do is select the setup 60 minute, and then the trade type low breakout, since that's what we're looking at specifically. And I can define volatility periods in a whole bunch of different ways within this platform by going through the different libraries here on the left-hand side. But for this one, we're going to come into our volatility library specifically, and I'm just going to use the VIX. So a one-day moving average of the VIX is simply the prior day's closing price of the VIX. And a lot of people use the VIX to determine volatility. Historically, low vol environments typically have VIXs under 15 or so is a low VIX environment. So what I can do is I can come in here and I can type in a maximum VIX level of 15. And then I can hit view results and we will be able to see the results of my setup up here, which is for the S&P E-mini, a 60-minute low breakout. We'll be looking back to 2003 for our data, and it'll be entering short for the low breakout. That's low breakout is a short trade, and it'll be exiting at the end of regular trading hours. So it's entering on the break of the first 60 minutes of regular trading hours low, and then it exits at the close of regular trading hours, which is 4:15 p.m. Eastern Time. So this is all I'm adding here. I just have to hit view results, and we'll have results in just a couple seconds. There we go. So these are the results of taking a low breakout on the 60-minute opening range when the VIX is under 15. So a low volatility environment, a low breakout trade historically has not done well at all. And you can find out this type of information pretty quickly just working through our different libraries here in Discover. You can see on the right hand side you've got all the stats going back to 2003, just a 41.5% win rate, and that's on over 1,100 samples. So giant sample size there, very weak win rate, not something to be interested in on my behalf. In fact, because this is so weak, I'd probably want to start looking at low fades where you're actually buying down here where this is typically entering, and look at buying the lows for a bounce on this type of strategy. So why does it say exit 5-day ATR and exit end of day? So the 5-day ATR here for the exit methodology is just telling you which library it is. If I come over here to exit, it's telling you which library I'm using to pull the end of day stop and end of day target. But it is exiting at 4:15 p.m. Eastern time. We've also got dollar-based stops available here as well. And if I click on dollars, you'll see that changes there. I've got end of day stops and targets from that option available as well. But I was using 5-day ATR, and that's why it showed 5-day ATR up there. All right, so let me hand this back over to Scott, and we'll keep moving along through some more examples.
Thank you, Matt. And no problem for those who are just joining us. You will receive a copy of the recording and a copy of these slides. We have very detailed slides because we know we share a lot of information and it's hard to digest it at any length of time. So we do share this information with you, and you'll be able to catch up quickly. And I had one other comment. Larry was interested in expected bias based on overnight markets. Yeah, so it's the overnight price action, the Globex session, right, that creates the opportunity, the unique opening areas. And you can, many of our edges are discovered, if you will, and we'll show you based upon where you open. So it's that overnight price action that sets up the intraday bias. All right, so next one. Next use case is one of daily preparation. So preparation is king, right? The prepared trader is more likely to win than the cowboy trader or cowgirl trader who just goes in and wings it, right? So most of you probably wouldn't be here unless you were very serious about trading, so I'm sure that does not apply to you. But a simple way I wanted to point out, and we're actually not going to show all of these examples in the platform just for time's sake, but a simple way is to use a tool that we call Analyze. You may see Analyze next time Matt shows you the interface of Discover. And the Analyze section is where you can actually look at each of these different categories or libraries. We call them market events, calendar, price patterns, indicators, and so on. And you can identify, at a glance, the historical long bias for a given setup. And in fact, you see a lot of red here today. So this particular day, whenever we pulled this data, was a very weak day to be long, whether we gapped up or gapped down. But the one I circled in particular was the last trading day of the month. So you may have had a strategy trigger or on the last trading day of the month, and you were tempted to trade it, or you were following your plan to trade it. But if you saw this kind of information, it ought to at least have you consider reducing your position size or seeking additional confirmation. As I found in my own research and just trading for years doing this, statistical edges work about 70% of the time. That's about as much as you're going to get out of a really good edge, meaning there's some other outside factor that will overwhelm even the strongest statistical edge about 3 times out of 10. So it's just a piece of information or a vote into your trading plan, and that's the way a lot of people use this information. So do the math, think about it. If you could eliminate perhaps a few losses a year for your core strategy or a given strategy, that can make a huge difference year in and year out, right? And do that across multiple strategies just simply by not trading against known quantified historical biases. And the last trade day of the month has structural reasons, and I won't get into those now, but structural reasons why it often has a very weak bias. In fact, the bias is weakest when it's above a 200-day moving average, and then ironically, it actually reverses when you're below a 200-day moving average. So this past Friday, we rallied a little bit, I think in part because we're just barely above that 200-day moving average. All right, so let me go to the next example. So another daily prep example would be to come into the platform. You have a trade. Let's say maybe you've got a signal to get long gold, right? You're a fundamental trader. You have some simple technical considerations you like to look at, and you plan to get long, but you decide to check the Discover platform out and say, check out the particular pattern in play, because you're actually excited thinking, this is a hypothetical, thinking that perhaps the long bias is even exacerbated here. You've got a great opportunity to buy the dip in gold because you have a long bias. And this example shows you're above the 200 in gold and it's closed lower 2 days in a row. Now we're gapping below the prior low. So you're setting up like a 3-day low at the open. Great opportunity to buy, right? Well, maybe not. Matt, you want to show that example?
Sure. Let me take over here today. So this one was actually something that was in play for the current trading day today. This actually played out. That was a setup from today. So all I got to do is come in here, select the metals asset group where you can see we've got gold, silver, and copper. And now I can set up this pattern, which was based off of going long at the open in gold. And we're using regular trading hours again for everything in here. And it was based off of going long specifically if opening below the prior day low. So I've got this opening filters library over here, which allows me to look at all kinds of different opening areas for the current trading day or how it's opened historically. And we opened below the prior day low, as that example said, after 2 lower closes. So it's creating this pullback pattern and it's still above a 200-day moving average. So kind of a pullback in a somewhat bullish environment. And I can define that next by going into price patterns and finding these 2 consecutive lower closes, which is in the new lows section here of the price patterns. Hit equals next to 2 lower closes. That adds it to my test criteria up top. And then I can go to indicators and say that it was above a 200-day moving average. All of this was true for today. And if I come in and hit view results, we'll be able to see what has this looked like historically. And there you go. So historically, when gold has gapped down below the prior day low after 2 daily lower closes above the 200-day moving average, it has been a sign of weakness where you would want to think about the short side in that scenario. Buying this is not a dip that you would want to be buying. So this is more of a follow the gap type of strategy where you gap down and you go with the gap. And that's pretty much how it played out today, actually. It finished down about 20 points from its open with this exact same pattern in play.
Thank you, man. That's interesting. It's one of the things we've learned. I don't trade many of the commodities. I tend to stick with indices. We do a little bit of rates, but the commodities all have different behaviors, right? Often buying the dip in a bull market is the way to go in some of these markets, but with gold apparently not. All right, let's go to the next example. And let's say you just simply have your own ideas that you want to test, right? There is perhaps an infinite number of something more than you could ever test in the platform already with all the many different indicators and libraries that we're showing here. We have many of them and we don't have time to get in a lot of detail, but are there any market profile traders in here by chance or volume profile traders? I am not a profile trader. Matt actually has done quite a bit over the years. I've read the Dalton books and I'm a big believer in the approach for understanding market structure. But if you're a market profile person, we actually have a library of profile patterns that you could test. So in this hypothetical scenario, maybe you wanted to test a low fade after a market profile trend day, quote unquote. So you can do that. You can test many different combinations of factors. Now, can you test every single one? Of course not. We are building out the platform rapidly. It's been public for about a year, and it's probably tripled in size in terms of total number of indicators available. We continue to add them each month, and I would say we're probably at 10% of where we're trying to get to. So, but still, there's an enormous number of ideas that you can test already. And if you're not a creative person, you can actually jumpstart that process. In fact, we hear this quite a bit. I tend to think of myself as a creative person, so I take it for granted, but I struggle with too many ideas, but not everyone is like that, right? So we have something in the platform that's embedded that we'll try to remember to show you as we go through the platform called IQ Bias Alerts and an IQ Bias Library. The bias alerts are, in the bias library, are sort of one and the same. So we have a library of about 150 different statistically significant or noteworthy. I would say most of them are statistically significant, t-score is greater than 2, or close to that, and therefore we call them noteworthy historical biases across all the markets you see listed there. So a number of the different commodities and indices, and they're meant to help you jumpstart the edge discovery process. So every day in our alerts section, you can see bias alerts that are already preloaded into the platform. They can give you an idea if there's a risk factor to the long side or short side or perhaps an edge. If you want the library up front, that delivers every day. It updates you with whatever alerts are triggering that day from our library of 150. If you want to build strategies, like over a weekend or get a head start on them and access all of them, you do need to have an annual license because it is essentially a part of our IP, right, that we're giving away. So we do require that you have an annual license to get access to the library. But you can get the alerts are embedded and they're currently available at no additional charge to the platform. And they can, in fact, some people even license them separately just as for alerts. So that might be of interest to you as well. And we can talk about that more when we get to pricing. And I see a comment from Bill. Yeah, Bill, managed trading. I'm not going to get into that now, but we will follow up and give you some ideas. And I'm not familiar with the zigzag %8 strategy, but it sounds interesting. That's what's fun about trading. There's absolutely no end to the creative ideas and ways to identify edges. So one way I tell people that say they struggle with creativity and maybe you're not in a position to buy an annual license and get access to the library right now, and you're struggling with ideas and you want more than maybe we're sharing with our own alerts, well, that's why we have the platform. It enables you to test ideas. But if you want to get ideas, just go into the libraries. So we thought it'd be interesting to show you an easy one here, event-specific strategies. We have, I should know the number, but I don't. It's probably 40 or so, maybe 50 different market events, and you can test the day before, day of, and day after. So a lot of folks have options expiration Friday strategies because they tend to work. So if you're an intraday trader, you certainly should check it out, and we thought it'd be helpful to have Matt show us an example of one.
Sure, so let me hop back into Discover. For this one, we've done ES, we've done gold, so I'm going to use Nasdaq for this example. And we'll look at options expiration, entering at the open as a long setup. So you enter at the open. I've got the exit set to end of day. So this is entering at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time as a long on options expiration day. So to add options expiration, I come into this market events library, and we've got a huge list of some of the higher tiered market events. Here is options expiration. Hit equals next to that, and then view results, and we can look at the results of going long on options expiration day. And you can see historically this has been an awful day to be getting long and holding till the close in the NASDAQ. We've got 208 samples here, and this one just consistently loses money and kind of going exponential to the downside here in recent years. It's losing consistently, and it's losing bigger than it is winning when it does win. So this is something that can be turned into an intraday strategy as well, as opposed to just using it as an end-of-day bias, which is what we see right here. But because we see that this is so strong to the short side, what you might want to do is come into symbols and settings and look at making this like a gap fade strategy, where you would fade up gaps to take advantage of that downside bias. So if I come in here and change the trade type to fade, I can then go into exit and I can target the prior day closing price. So that'll be what's called a gap fade, where you target the prior day's closing price, and I can add a stop. I'll use 40% of the 5-day ATR, so that'll always adjust to the current volatility. And then I can go into opening filters and just select that it's gapping up. So by making sure that it's gapping up, that's going to take advantage of the bias to the downside and just take advantage of the short trades. So this fade will be a short trade when gapping up on options expiration day. And in fact, I can even just put, the gap has to be at least 5 points. So if I come in here, I can type in 5, put a minimum gap size in there. So you've got at least 5 points of potential there, and then hit view results. And we will see the results of fading up gap, so getting short on an up gap of at least 5 points on options expiration day in the Nasdaq. This is using 40% of the 5-day ATR as a stop, and it is targeting gap fill. So that gets you 85 samples. 85 of those have been up gaps of at least 5 points, and a win rate coming in just under 70%. So it's really strong. Nice average trade, nice profit factor, nice T-score. Overall, pretty strong set of stats and a pretty strong looking equity curve there if you wanted to build out an options expiration day strategy. And let's see, Jillian is asking about quad witching on OPEX. So you can easily see here below the months of quad witching. So that's March, June, September, and December. It looks like December is a little bit weak for that month, but I believe we can also come into the calendar, and quad witching would also be, let me come in here, not calendar, market events. The week of index futures expiration. So I could click on this, and it's going to isolate those index futures expiration week as an options expiration day, which is going to be quad witching. So it's going to give you the same information, since those always happen on the same days, and that looks like it's right in line with that overall bias that we just saw. So quad witching, pretty similar to the other options expiration days, and all of those looking very, very strong. All right, let me hand this back over to Mr. Scott.
Thanks, Matt. And you could have also, you did it the easy way, because the way I've done the quad witching in the past would be to simply hit the minus sign beside the first 2 months of each quarter, right? January, February, April, May, and so on, right?
That's, yeah, we put it.
That's the more workman-like approach.
Futures. Yeah,
Right.
that's how I used to have to do, is come in here and just exclude these
Right.
months, and you can exclude any months that you want to exclude, and you can get at the exact same thing, or create kind of your own custom calendar and run the results that way as well, because we've got all kinds of calendar
Well, I like your
functionality as well. So
I like your approach better.
same way to get
I've
there.
learned something new too, which
Yeah.
is good.
Cool.
All right, great. All right, another example. Actually, this is not an example. Well, it's a use case example, but one of the, we've just powered through a number of different scenarios for research that you can do using the platform, and there's many others as well. But it can become overwhelming, right? And I've been a bit of a programmer hack, if you will, over the years, and I've probably done more research than I'm proud to admit in terms of days of my life or months of my lives, maybe years of my life. I've wasted's the wrong word, but I've spent researching. It feels wasted now because Discover's so fast, but I used to use a commercial platform, and it was very good, but it's still much, much slower to do this. But the biggest challenge I had was I'd spend all this time doing research. It was almost impossible to keep it all organized because I had so many different sticky notes and catalogs of information that I'd accumulated, but I couldn't find it when I needed it. And invariably, I'd miss great setups. So what we thought would be helpful here is to show you how with Discover you can save, manage, and be alerted on that research and never miss another quality setup, or maybe it's a high-risk scenario again.
Yeah, so let me show you how you can do that real quick. We'll just stick with this options expiration day strategy that I just created here. And if I scroll down to the very bottom, you'll see we have the ability to save whatever research you do. It doesn't matter if it's a strategy or just a piece of research that you might want to dig into later. But all you got to do is come in here and name it. I'm going to call it OPEX Day Fade. Hit Save Strategy there, and it'll save it into our strategies folders over here, and you can click on strategies in the menu bar, and that'll take you to where all of your saved research will be. You can see I've got my strategy selected up here. Here is the OPEX day fade that I just created for the Nasdaq, where you gap up at least 5 points on options expiration day, and that is a fade trade with a 40% of the 5-day ATR as a stop and targeting the prior close. And you can save as much research in here as you want. In fact, this one looks like I've got 160 different things saved in here, and you can save all kinds of stuff because there's a lot of really interesting research and strategies that can be created. But once you save it, you'll always have it available here. I can click on this button on the far right hand side, and that will load it right back into Discover. So if I build it and I come back to it, say 2 months from now, I can just click on that button. It's going to put all that stuff right back in the header, rerun the results for me, and update it with anything that maybe I hadn't seen since last time I ran it. And then also, you've got the ability to enable the alert, and this is key because, as you can see, 161 different pieces of research strategies within this account here. There's no way I can remember all of that, but if you click this alerts button right here, it'll tell you the next time that it is in play for the trading day, so you never miss out on it. So once that is enabled, you can come into the alerts section up here, and you'll see we've got a couple different buttons up top. We've got My Alerts, which are for your own personal research. Whatever you create will show up in the My Alerts section, and it'll tell you when it is true for the day. We've also got Bias Alerts, which are pre-made alerts for you that will tell you when something is either noteworthy or statistically significant. Here's a couple that were in play for today. So the way they're laid out is you've got the title up top. You've got the information about the setup, the research that you saved. So this one is for the S&P 500. Its time frame is the intraday open, so that enters at the open as a long. This is an end of day bias, so entering at the open, and when you've got a stop and target that says end of day, that means it is exiting at the close of regular trading hours, entering at the open of regular trading hours, so 9:30 a.m. Eastern Time to 4:15 p.m. Eastern Time. And then you've got all the criteria that is needed. This one says open above the prior day high when the 1-day ATR is less than the 5-day ATR. Both of those are true. That's why they're highlighted in green here. We've got the opening price, which tells you what time or what price that would have entered at, since this is an opening time frame based strategy. And then to the far right of that, you've got the equity curve with some quick stats that go next to it. And this stuff is all available the night before for the potential setups. Now the difference is the night before, the opening filters are going to show up in yellow because we don't know that at the time. But they show up around 8 to 9 p.m. Eastern Time, whenever the database fully finishes updating with the most recent day's data, and it would tell you what the opening filter needs to be, but it'd be highlighted in yellow. And then at the open, it'll actually change colors to green like this one did this morning, telling you that it's actually true for the day. So that happens, since this is a 9:30 entry, this happens right at 9:30. It changes to green. You get a little audio notification as well, and that tells you that it is true for the day. And then you can click on either the view button or this equity curve, and it's going to load the stats back into Discover for you, so you can kind of dig into it more. Maybe you forgot about what it was, if it's your own or something you haven't looked at in a long time. But you can quickly come back in here, and you can even massage it once you're in here. Maybe you want to turn it into a different type of trade, or you want to add a stop on it or something. You want to throw a stop on it and just see how does a stop work with that bias, or adjust your research to have a little bit different entry, whatever. You can do all of that once you're back into Discover. All right, let me...
and I want to use this opportunity. Yeah, I want to use this opportunity to just comment on something, because I know it's going through some of your minds, and I typically take it for granted, but I should not. We would never trade a futures position without a stop, right? So all of these biases, if you will, are literally meant to be directional indicators, signals that you can trade around. That's what our clients do. Some enter at the open, like I've done for years. And if you do that, you're going to have to use a bigger stop akin to some of these larger stop amounts that we've shown there. With high volatility like right now, you could trade micros with, most people could probably trade micros with a 30 or 40% stop, but it's tougher when you have higher volatility. The other way to use this information is to trade around the idea. Wait for a dip and buy around support, or wait for a breakout and trade in that direction. If we had time, we could show you how on the same days that you have these strong directional open to close biases, you can also typically find very strong 15-minute, 30-minute, 60-minute range breakouts, even trades in the last hour or in the afternoon around that exact same bias. So it's all about trying to get the wind at your back in your trading instead of trying to trade against it. So that's the idea here. And again, you can use micros. You can also use options. If you know what size stop typically a setup has worked well with, right? You can do a credit spread trade. You can do a number of different ways to take advantage of these same concepts. Question about a couple of questions here real quickly also, because we're getting a little bit short on time. Is it possible to do portfolio back testing, so a back test of entire portfolio? Not yet, MG. That's something on our radar, something we want to accomplish as well. We do have a portfolio tracker on our legacy platform. We don't have that incorporated here. It's a little bit more complicated, but we hope to get to that at some point. You do have the ability, however, to download the daily trade list. So Matt, if you can scroll down and show that. So you can go back in time for each of your strategies, click one button and download the file right there. And then you can take those files, and there's a number of, I think there are even some free ones out there now, where you can upload a trade list and see what the hypothetical portfolio results would be. So a little food for thought there. And Brad asked about IQ alerts. Just real quickly, we don't have time to go into it today. We're certainly not trying to keep anything from anyone, but across the top you see IQ edges and SSE. Those are two pieces of functionality. SSE, where Matt's pointing, is basically for data mining the best statistical edges in our database. It's sort of, it's a high value product. It comes with a high price tag as well. If you're more of an algorithmic or systematic person, or you just really want to get to find the best edges in our database, and it's something like 100,000 different combinations for each market right now, you can license that. We'd be happy to talk to you about that offline. IQ Edges is a add-on to the platform that's really around a concept called ensemble testing or ensemble forecasting, where we take multiple systems that we've created over the years, and when they align, they often create a very strong edge. So we have, with that IQ Edges, that's an upgrade. You have to have the Discover platform. You have to know how to work, use the Discover platform. But once you have that, you can upgrade. We talked to you about IQ Edges. And with IQ Edges, we do have alerts around some of our, I guess you'd call it secret sauce. Hey, Matt, go ahead and click on the IQ alerts for today. I think we have one trigger that would have made you a little bit of money today. They don't trigger very frequently. Yeah, so that's a momentum bias long. Again, it's more of a premium upgrade for people, but happy to talk to you offline. And Bruce is asking, is there a way to search your database for the best setups? Yes, that is the SSE product. SSE, go ahead and click on it, Matt. Stands for statistically significant edges. And we don't have time to do searches right now, but you can mine by different performance criteria, number of trades or historical samples, net profit, win rates, average trades, profit factors, T-scores. You can do it by past 5 years, past 10 years, past 15 years, and on and on and on. It is sort of the keys to the kingdom, if you will, in terms of our intellectual property. It's a high value product. So again, we'll talk to you offline if you're interested. The good news is we make it easy for you with our bias library and these alerts to find many of the best setups without having to go through that effort. So they're embedded in your alerts, and you can also find it just by being creative and using the Discover platform. Let's get back to the slides if we can real quickly, but I did want to comment on those two things. So Matt just showed you can save, manage, and be alerted on your different edges or research or strategies. People save all kinds of information, as you'd imagine, in the platform. It doesn't have to be a full-blown strategy. Last but not least, and just for time's sake, we're going to skip doing an example on this, but if you watch any of the Daily IQ videos that Matt does, he often shows what we call real-time decision support, where we will look at a price action going into the close and can literally test what's happened up until that point that day to identify a directional bias that you can lean on or avoid into the close if you're in a trade or you're looking for a trade. In fact, I think this was yesterday's example,
Yeah, that's
Matt?
yesterday. Uh-huh.
Yeah, so we had what we call that volatility compression setup, and you were looking at what may happen going into the close at the end of the day based upon the fact that in our post-open filter section, they're highlighted in blue on the left, the gap had filled, and at that time we were trading above the opening price, right? So ended up being directionally right yesterday. They're not always right, nothing is, but it can certainly help when you're indecisive or not sure and you're looking for a little bit of extra information. So in summary, we've shown you a number of ways. There are others as well, but these I think are good descriptions of the way most of our clients use the platform. They learn it to better learn their own markets, either to enter a new market, to know your existing market, as well as your strategies and setups that you like to trade with them. They use it to prepare for the trading day, identify risk factors to avoid, or maybe opportunities to lean on, or even just opportunities to trade, period. Many times those unique opportunities you might find on a unique trading day, you can actually save it as Matt just showed you and create a new edge and a new strategy and set up alerts and diversify your own trading. And diversification is huge for any time frame trader, as I think you probably all realize. If not, you will. You'll realize it soon. Nothing works all the time, folks, right? So the idea is to have a portfolio of different ways of trading the markets, and we believe our platform does a tremendous job of doing just that. You can also dig into identifying optimal entries and exits to identify adverse excursion and favorable excursion in different scenarios, so you can better take advantage of those edges. And then as we showed you, the platform is really tremendous at saving research and managing it, updating it. It's just very, very easy to do that. Track results, track out of sample, and set up those alerts. So it's a powerful platform. When you think about things we've shown you there, I encourage you to also think in terms of your trading performance, right? Everyone should closely track, and I'm sure you do, your performance, not just how you're doing this month or have you made money or lost money, but I encourage you to track your win rates, your average win size, your average loss size, right? Those are really important. Your average expectancy per trade, all of that's critically important. And when you start thinking about these different pieces that I'm showing you there, that's exactly what the platform does. You can improve your win rate by being more selective. You can improve your average win size by holding on to your winners longer because you've got data that suggests holding till the end of the day perhaps. You can cut your losses shorter because the data may be suggesting that you do so. You can increase your trade frequency. Some people will try to trade less frequently, I realize that. But some people are trying to turn their inventory more. Some people have a hard time pulling the trigger. And if you can turn your inventory, which is your cash, right, trade more frequently with an edge, you can make more money and you can be more diversified. So a lot of bottom line benefits for you. We recognize the platform is not inexpensive. We think it is inexpensive to its value, of course, and I guess that's relative to everyone. But a little food for thought there as you try to, as you consider the pricing we're about to show you. So there's several configurations, and in fact, let me just begin with the end of mine because we're getting close to an hour. The best way to learn more is to complete the survey that you should have in your inbox right now. If not, email us, Matt at InvestorQuant or Scott at InvestorQuant, or just use the link right there and give us your feedback. Tell us what you think. We'd love to learn a little bit more about you, but most importantly, tell us what information you'd like. This is our most popular pricing package. It includes everything that we demoed today. We call it Discover Intraday Pro, so it has the intraday setups, the opening range, 15-minute, 30-minute, 60-minute range setups, intraday exits as well, post-open filter, so you can do things like evaluating price action into the close like Matt did yesterday and like I just showed you. That's $2.99 a month. You can pay for 10 months and get an extra 2 months for free, so the pricing comes out to $29.90 for an annual prices for the Discover Research tool that we've shown you. And if you sign up by Sunday, just to give you a reason to consider doing so if you're on the fence, you can save $100 in your first month. So if you're not sure, we often get the question, do you offer free trials? We don't. There's so much value in the platform. As you can see how fast it is. We literally had, we had a gentleman sign up last week, and I'm going to mess up the numbers, I know, but I know he signed up last week. He's already gone over 1,000 searches. I think that's our record to get to 1,000 searches. It is just so easy to iterate and learn as you go and create edges and find edges and so on. So no free trials, but you can essentially get a trial for a third off, get $100 off your first month if you take advantage of that code by Sunday. And as I mentioned, if this is too much for you and out of your budget, we have an alerts only package for $99 a month. Or if you're just looking for broad directional daily biases without any ability to do intraday testing, we do have the Daily Pro or intraday, I should say, Discover Platform Daily version, which is $100 less. That'll save you a little bit of money as well. If you want information on the SSC database or IQ edges, we probably need to demo those to you separately. Let us know. We'd be happy to do that for you and show you other ways that you can leverage our decade plus of doing this. So this pricing is for one asset group. That means the indices like Nasdaq. Yeah, go to those. That'd be great. Just quickly click through those and talk us through that, Matt.
Yeah, so an asset group is the group of instruments that fall within what we call the asset group. So we've got the indices, which include the ES, the Nasdaq, the YM, the Russell. That's what the majority of our clients are using. And then we've also got interest rates. We've got a 10-year note, 30-year bond, 5-year note futures. Energies, this is where you'll find crude oil, so CL. We've also got heating oil, nat gas available. The metals asset group includes gold, silver, and copper. And then we've got equity ETFs, which would be like the spiders, the Qs, the diamonds, and the IWM, so kind of the sister markets to the index futures. And then we have sector ETFs, which are the 9 sector select ETFs. So that's like XLE and XLF, XLK are some of the more popular sector ETFs that are available, and that would be within the sector ETFs asset group.
So hopefully that answers your question. Take us back to the slides, Matt. And yeah, so we're ready for questions now. Other questions? In fact, I will show you the link there. If you want to purchase by Sunday, you can go straight to that link. Certainly, we'll send it to you if you ask, complete the survey, and we'll send you the pricing information and the link as well, and all the pricing options if you're interested in the other pricing options as well. But just remember, when you put the coupon code in, you only do that after you add it to your shopping cart. So you'll see the $2.99 price, add it to your shopping cart, and when you view it, you'll have an opportunity to enter your coupon code and apply it, and that'll drop your price by $100. Oh, good. Yeah, good idea, Matt.
Yeah, so you can just
so
you
you
go to
clicked
that
on
link,
add to cart.
you hit add to cart, and then once you do that, you'll be able to view your cart, where you can type in the coupon code. 100 off. That's going to get you $100 off your first month. You hit apply, you'll see that it's applied right here. That brings the total down to $199 for your first month there to get started.
Well, let's open up the questions to anything and everything now. We've covered a lot of ground in an hour, and I really hate going over an hour, but believe me, this was as short as we felt like we could make it today. So wish we had certainly open to your questions. We'll keep the recording going if you have to cut out, but any and all questions, fire away. See, we've got a question from Julian. Are IQ alerts generated by Discover Daily? Yeah, no, they're not. So they are, right now, we're just starting to roll out alerts. Again, there are enhancements that are part of the IQ Edges package. So it's really, think of the IQ Edges and alerts as sort of our secret sauce and proprietary information. We've learned a few things over the years, as you know, and we are starting to incorporate some of our own alerts into the Edges because it is a premium product there. But they're not daily. Sometimes you could go days or a week or more without anything. And MG says, so the Discover at $299 a month, $29.90 a year includes a single asset group and all the factors for testing you showed today, right? Correct. As you see on the screen here, as you think, ponder questions and type away, these are clients. I'm extremely proud of something that not many people in this industry can say. The majority of our clients have been clients for multiple years. In fact, many of these names, even on the screen that you're seeing there, have been clients for more than 5 years, some as long as 10 years. In fact, we've got a gentleman in the room, assuming it's the same person that I think it is. Oh, there's not another person named with the same name who has been with us for 12 years, off and on. So good to see you in here, Dave. So I think that's a testament to we eat our own cooking, we do high quality work, we're real traders, we build awesome software, and because we're using it ourselves, we're normally the first ones to find the errors, but we do have a big group of people that are quick to use the tell us button. I don't know if you saw the tell us button, but it's a way to communicate with us when anything's wrong or off or you suspect it might be. Everyone gets copied on it, and we're very quick to rectify any potential issues. Let's see. Yes, so Bruce says, you mentioned in your email that clients on average have over 40 strategies with alerts. Could you explain? Yes, so when Matt showed you he had over 100, like I think 160 in his My Alerts, that's what I meant. So a typical client has over 40, and it's probably more than that now because that's a couple months old data. But people are continuing building their own edges. It might not be an actual strategy. It could be just a research nugget they want to monitor. Could be just a potential risk factor that they're paying attention to. So it doesn't mean they're actually trading it, but something they have saved that they think is value added and they use to improve their trading. Brad says, you showed examples of day trade edges. Can you also use the platform for long-term edges, thinking about holding ETF positions? Brad, we do and have historically supported swing trading. It's on our legacy platform. Our expertise is really intraday. We will probably evolve down the back to swing trading on this platform as well, because there's obviously a much bigger market that does swing trading. I don't have a timeline for you on that. We hope to do that. We also do overnight trading, and that'll be incorporated in the platform at some point, probably sooner. That's probably the next step. So you'll have to stay tuned, be patient, but join us now and learn the platform and help us build this out. We do prioritize based upon client feedback all the time. So our clients get the first vote, of course. Gary says, how is the bias library different than the bias alerts? Gary, the bias library is the repository for all of the edges that we call bias alerts. Everyone gets the bias alerts fed to them, if you will, in the alert section as they trigger on a given day, or might trigger. You get pre-open alerts as well, and those are available the evening before, generally by 8 or 9 Eastern time. Those are shown to you. You only get access to the bias library, which is in the strategy section. Maybe it's worth showing that, Matt. once you pay for an annual subscription. And the reason is we don't want people just frankly signing up for a month, taking 150 awesome edges that we spend a lot of time and effort finding and creating and walking away. So there's too much information, value and information you can make money on. Some of these are pretty broad, like you see they're biased Thursday. Believe it or not, Thursdays actually have some pretty unique biases in certain scenarios. But some of these have some pretty detailed rules. We really do try to help people find edges and inspire you to build your own strategies, and we just don't want to give it away. So Kim says, is there additional cost for data? There is not. Obviously, to trade, you'll have to have the data from your broker, but for us, there is not. Brad says, do you still run the live trading room you used to? Yep, Matt monitors it every day. We've got a hardcore group of 15, 20, 25 people on any given day that will show up and watch Matt work his magic and evaluate lots of scenarios. And we call it our training room, but it's sort of a trading room as well. So it's just a great group. Some professional traders are there every day. And what I mean by professional, guys trading 100 million, managing 100 million in capital are in that room. So there's some super smart people speaking up, and it's available at no additional charge. That's great, MG. Welcome. Bruce, absolutely. Yeah, we should probably make that clear. We pride ourselves on support. We want everyone to be wildly successful. The more successful you are, we believe everyone can be successful, frankly, on the intraday time frame, because it's mostly driven by, the liquidity is driven by big money. So we can all, there's room for all of us to do well with the leverage of futures, and the volume is just so high today, and the volatility is so high that it's just a tremendous opportunity to be an intraday trader. So we support Matt's a tremendous support person. We've got others that help him. You may, Brian Casto here in the room is a client engagement. You may have gotten emails from Brian, but his job is to help you get the right product for your needs and make sure you're satisfied with it. When you're not, he tells us, and we work hard to try to make it right. So, yeah, Brad, great. I'll have to look up your last name. I tend to remember names from back in the past. So, yeah, Master the Gap, that was a good ride, and we've grown a lot, you know. So, been very exciting, and hard to believe we've been, I guess, supporting traders for 12 years now, almost 13 years. Well, we're all about teaching people how to fish. And if you remember early on, I was literally sharing the signals out of my system, and that's how we got our start. My signals out of my system, much to my delight, though I was very fearful that it would not be the case. My signals out of our system that I created for trading bear markets worked in 2008. I had never traded a bear market when we started Master the Gap. I'd only traded bull markets, 04, 05, 06, 03, 07. And anyhow, the signals worked, but quickly I realized that my secret sauce was just the way I quantified information, and that's what people wanted. They didn't want to necessarily follow me. So we've been working on teaching people how to fish for a long time, and again, really proud of how many people we have that still follow us today. Well, I have gone longer than I've gone in a long time, and I'm going to call it a day and let everyone get to their families. If you have further questions, shoot us an email, Scott@InvestaQuant, that's 2 T's. Happy to answer. Matt, Brian at InvestaQuant. Brian's probably your fastest resource for getting answers. Matt's pretty quick as well. I'm probably the slowest. But we look forward to having you guys join us, and gals. And have questions, let us know. Don't forget to complete the survey. You should have the link a little earlier on. Give us feedback, good, bad, ugly. We love it all. Thank you all. Have a great night.